right. Hi, Tom. It's a pleasure to have you here. Thank you for joining me. I want you to introduce yourself in a quick second, but just for the benefit of the industry, look, most everyone in our industry knows SIRVA. There's been very big news with SIRVA in the last couple of weeks, and as is WERC's objective, we want to make sure that this news is not only well understood by the industry, but it is also appreciated in terms of its implications for both SIRVA, its stakeholders, but also our industry at large. And so, with that said, I'm excited to be sitting down again with you, Tom. It's been a few months since we last caught up, but you've been just a smidge busy in the meantime. Before we dive straight into it, if for anybody that may not already be familiar with SIRVA and yourself, if you wouldn't mind just doing a quick introduction for folks, since there'll be people watching this around the world.
Sure. Thanks, Anupam. So look, first, a quick introduction on myself, Tom Oberdorf, CEO of SIRVA. I've been here about 13 years. Time is flying.
Wow.
I started off as CFO and about 8 years ago became CEO. The SIRVA, the company itself, the SIRVA piece, the relocation piece is a typical RMC. The differentiator between us and what might be, what other RMCs may look like. Some have real estate attached to them. Some are just pure RMCs. We have the van lines, the trucks that you see behind me. Allied North American, those are our two van lines, very proud of them. And that kind of differentiates ourselves in a little bit as well. So that's SIRVA in a nutshell.
So just for scope and scale, do you have on hand how many people you are and how many clients you have, how many geographies you operate in?
Sure, I will. So that's a very numeric question all over the place. So let me start by talking about the people. We have just under 4,000 people worldwide. Okay. And last I looked, there's about an equal amount of people outside the United States versus inside the United States. And maybe I should even say North America versus outside of North America. So 4,000 people. Clients, as we have, clients all over the world, global clients. We have everything from global headquartered clients around the world, whether they're in Europe or US, or whether they're domestic, whether they're domestic US or they could be domestic Netherlands or UK. And what's the third stat you were kind of asking me about?
Clients. Number of clients, if you talk about that, or if you're able to
clients,
say.
Well, look, one of the things that really does differentiate ourselves is that we just don't have corporate clients. We have consumers and we have military. Now that's on the moving side. So we have hundreds and hundreds, actually it's probably over 1,000 corporate clients, but we do 170,000, moves a year, or, upwards of that number. And of course, we do military as well. So when we look at our client base, we have the three areas: corporate, consumer, and military. Certainly, when we look at the relo business, that is corporate, right? And sometimes we have that corporate client here, both in SIRVA, and it becomes a corporate client in our van lines as well.
Got it. Okay, so just slightly big. You all are slightly big is the point. Okay. All right. That's helpful. Thank you for contextualizing. So look, the company announced some big news recently by way of a transaction. Just for people listening in and tuning in the simplest terms you can, just help us understand what exactly did you do?
Sure. So in the simplest terms, we changed ownership. All right. So we used to be owned by a private equity firm and a public company in Japan called Relo Group. That ownership changed on August 20th, I believe it was, to some of the owners. You'll recognize KKR, BlackRock, Evolution Partners, but there are some smaller partners as well. To be very specific and very transparent, these were our lenders. So what they did is they took over the ownership of the company. They now have equity and debt. right? They used to always have debt just on the debt side. But as a result of it, and this is why I love this transaction, is we've halved our debt and we've halved our amortization and interest costs that go to those debt holders. And they did that because they now have equity. They believe in the company. They think this equity is going to be worth a lot of money. So they lowered, significant portions of our debt and our ongoing interest and amortization costs.
So what triggered this transaction? I mean, are you able to share some of the context?
Yeah. Look, I always want to deal with the positives, but truly what happened is, just like any private equity company, they lever up their investments.
Yep.
And quite frankly, when we got to 2020, end of 2022, shortly after the merger of BGRS, and the beginning of 23, and we all know this because even if you're not sophisticated into the Treasury area, we saw interest rates on mortgages go on the US side from 2.5% to 7%. So interest rates went through the roof. At that point, that's when liquidity started getting a little tighter because all of a sudden, we're seeing our interest payments and not amortization, but interest payments, almost doubling. So at that point, we started talking to the banks. We started talking to the owners that we knew we had to refinance. And quite frankly, the refinance became a restructure and a change of ownership, which for us, the whole idea is how do we get this annual payment down significantly? And we did, again, 50% less on an annual basis in interest and about 50% less in debt. So that was good for us.
Got it. So look, I think, you obviously know this, with my background in private equity and buyout investing, being on both sides of that kind of a transaction, one of the key things that happens is you dramatically cut down the drag on your cash flow.
Yep.
Because of the high cost of debt and the high cost to service the debt that you sounds like have been able to refinance and being able to cut into, like you said, half the debt, and the service cost comes down with that, I imagine. So given that, for the business going forward, it's sort of like hitting the reset button in many ways, from a financial perspective.
Yep.
What are your priorities looking ahead of the next 18, 36 months or even beyond?
Yeah.
What happens now? Like, okay, we're in this new era 9 days in. What are the priorities? What are you able to do? What are you focused on doing?
Yeah. So first, let me go back to just one point you made. So not only did we restructure and refinance, but we refinanced and push those debt so that, our debt is now due out in 2029 and 2030. So that's
wow.
And you talked about liquidity. It gives us a ton of new liquidity that, we didn't have when rates were high and the annual payments were as high as they were. What we're going to do today is no different than what we've been doing yesterday, except for, the liquidity does add a new angle for us. Look, if I talk to any customer of ours, what do they want us to do? There's two things that you hear repeat. Every client wants something a little bit different, but the clients they want lower cost and they want technology. They, of course, want a personal service. They wanted to have the empathy and all that. But the harder things to do, because I think our staff is built that way, but is how do you give them more technology and how do you bring down the cost? Well, both of those take money. We spend a ton of money on technology every year. We will spend more now. But there's two ways to do it. It's always the back end. How do you create your back end process to be more efficient? Productivity that can help bring down our cost and the client's cost. And then technology. How do you make sure the transferee has the best technology? How do you make sure the HR executive and mobility has the best technology? That's what they want. They always say they want the RMC to be the central point of information so that they can know what all the vendors are doing through one central point. So it's very important that we can invest even more money than we do. I do think we spend probably more than anyone, in the industry because we are the leader. But this allows us to actually double down on that. Now, last part of the question. Certainly this allows us now to look, and I know you'll probably get to it in later questions, but are there acquisitions out there? And this is an industry that probably is going to go through some consolidation. So will we look at acquisitions? Absolutely. Both sides, relo and moving. On the moving side, we have been acquiring slowly and quietly agents. So agents from other van lines that come over, we bring them in and put them into either the North American or the Allied brand. That's kind of small. Prior, I mean, in 22, obviously we did the merger with, with BGRS, but I still see that as a significant force going forward.
Interesting. So that actually dovetails really nicely into what I was going to ask you, which is, KKR for, I mean, it's for anyone that is not familiar with the private equity industry or KKR itself, it is credited as being one of the firms that invented private equity at scale. One of the masters of the universe, if you will. They have that label. They're one of the largest, if not the largest, private equity firms. Incredibly sophisticated and on and on and on. Having said that, there's a couple of things that come to mind. One is that through this transaction, it sounds like because you have new equity owners, you've sort of reset the clock a little bit, and you have the new equity owners restarting their clock compared to your old equity owners. And so there's more of a runway that you as a business now get 5 years added to your timeline in terms of whatever outcomes they want to get out of their ownership of SIRVA. But it begs the question in my head anyways, which I assume is true, but you should confirm that. But it also begs another question in my head, which is how well does KKR and the others, how well do they actually understand our industry, which is a fairly complex industry, like you said, and it is a cash intensive industry and a business. How well do they understand that? How good do you feel about having them as your equity partner? I mean, that's a little bit of a loaded question, I guess, because this is a public conversation, but as straight as you can be, it does reset the clock. So you have that going for you. How well do they understand the business and the industry?
So this is a public viewing. I love them, right? So So listen, they are obviously everybody knows the name of KKR and BlackRock. We don't have to get into that. It does reset the clock. That's an important thing. So if you think about MDP bought us in 2018. There is no doubt.
Oh, wow. Yeah.
Right. Yeah. So that was a while ago, but there was no doubt that COVID affected our industry. So
Right.
in 2020 and 2021, they were not ready to exit the business and, because it had an impact. But I think your point about resetting the clock is very good. And these investors do know. Remember, they've been our lenders since 2018, and some of them actually before. So they know the business. Now, having said that, they also know that they're finance guys and they need professionals on the board, to kind of guide this company. They have the resources, they have the cash resources, they have anything that we need to build this into a bigger and better business. However, there'll be 5 people on the board. And actually yesterday and today, I'm starting to interview some of these. So there'll be a KKR person who I know very well. I won't mention his name. I love you. They will be myself, and there'll be 3 independents. So right now we're looking for people that may not have industry. Let's face it, there's not a lot of us that have, relocation industry experience. I didn't when I came here. But they do have, they're experienced executives that, will get into the business. I will educate them very fast. And I think that some of them actually have some HR company background. And we have to think of ourselves, bigger than just relocating and moving people. We have to think of ourselves as, part of that HR, division in the clients that we serve. And I think that they'll add a lot of value. I actually just spoke to one yesterday, and it was an hour-long conversation. It was supposed to be an hour-long conversation. It went an hour and 40 minutes, and it was really good. So they're going to be good for us. These are going to be good, experienced people on the board.
Our conversation. I remember the last one was meant to be an hour and went hour 50 minutes. So I have 10 minutes on them, whoever this other party was. But so that's, well, thank you for sharing all of that. That's look, I agree that there's a lot to this industry that needs to happen by way of looking more broadly, looking at the sort of the more from a value creation perspective. Who are we creating value for, and how, and in what context? And that goes beyond simply moving boxes and moving people around. It directly impacts lives. So in that context, which is an HR thing, talent development, talent acquisition, etc. But having said that, I mean, do they have what is? Yeah, I'm trying to ascertain. Look, this is not the first time private equity is jumping into our industry, right? It's obviously happened back in 2018 with MDP. There's a number of other businesses in our industry that are private equity backed, but KKR is the largest. It is
Yep.
considered one of the most sophisticated. What do they have an outlook on our industry? And if so, what is their outlook? I'm just really curious about that.
Yeah, they do. In fact, it's just not KKR, but again, a lot of these are
And
lenders like
BlackRock, yeah.
BlackRock, and you know, if anything, I gotta put the hold the reins a little bit because they see the headwinds
Okay.
and they're financial people, right? So they also see
Yeah.
that these headwinds are going to go away. And I'm speaking now of the industry and certainly of us, but look, right now there's work from home.
Yeah.
Work from home affected this industry and it will continue to work. But the pendulum has gone all the way during the beginning of COVID and slowly coming back. It is never, in my opinion, never coming back to where it used to be, right? But you are seeing more and more companies requesting people to come back. That will bring up some relocations and that will get some of the relocations back. And so that's one of three, headwinds that we have right now. Now, let me just say this, and this is funny, because these are all finance guys, right? The financial companies, and as some of the people that are on the phone or listen to this, recording, financial people have been back in the office 4 to 5 days since almost the beginning. They are the first group to get back. Goldman said come back, all the big companies that come back. So these are financial people that are like, wait, yeah, absolutely, people will get back to the office. I do believe that there'll be industries and or job types that just continue to work from home, but that's a headwind. The other headwind is recessionary concerns. Whether it's our clients or competitors' clients, we're seeing some of these bigger companies tap the brakes a little bit. I see it a little bit more in European-based headquartered companies. I think the recession concerns are a little bit more there. Their inflation is a little higher. I think we've recovered a little better, but just on a macro level, we're seeing U.S. companies and companies that are around the world tapping the brakes a little bit and saying, what does the economy have in store for us? And third is just pure, interest rates. So, look, if I'm going to relocate, even if you want me to relocate, I get a home, and I get offered, home service, I may not buy in a new location and I may not sell in my old location. I don't know if I want to go from a 2.5% to a 7% mortgage.
Right.
And the reason why I bring up all three of those, they see this as those headwinds are going to turn into tailwinds, right? They will be tailwinds, by the way, for us and for the whole industry. I think we'll see some of that coming through. I looked at finance is my old background, right? So I looked at one of the SOFR curves, it's the interest rate curve, yep. And they're expecting 2%, at least the curves are telling us we'll be down 2% over the next 12 months. Now, that's a big number for, and as you said, highly in cash intensive businesses, because we're paying for somebody's to go into their temporary housing. We're paying for their move. We're paying for that. And then we're, securing it back from our clients. But there's a lot of them for upfront money that is involved in a relocation. So to sum it up, they see those headwinds turning into tailwinds.
Yeah, that's fascinating. I of course agree with all of those, and I think that should show through in all sorts of ways. But when I think about for those tailwinds to be fully realized, and you're kind enough to hat tip to the whole industry beyond just SIRVA that these are tailwinds that could benefit the whole industry. There is this question of like, okay, do we have too many players? Do we have too much capacity? Are we all trying to compete with each other a little too much in all the same ways, the same areas? How do you all think about, I mean, you mentioned M&A earlier. What should your supply chain think about this? Potential collaborators, partners? And is SIRVA sort of like, yep, you said you were gonna invest a lot more in technology. Is that all in-house and you're just building it on your own? Adding capacity in other areas wherever you might, and such. Or is it, are you looking to simply acquire these businesses, or is there also room for collaborating with folks that are, strong in a certain area, and rather than you try to build out and invest your own capital to build out capability in that area, you just partner with them? How
Yep.
should folks think about that?
So that is a loaded question. A lot of questions in there.
It
Let me
is.
talk about supply chain, and please, poke at me if I'm not answering part of the question.
Yeah.
So first of all, the supply chain for us is very, very important. Look, and again, relocation companies take a small fee of that total wallet when somebody moves.
Yeah.
The monthly the temporary housing, the physical move, the real estate fees, all of these things come into what it takes to move a person from point A to point B, and then an international move, all the other fees, whether it's immigration, and we need that strong supply chain. We try to make sure we have the best partners, and I think we do have the best partners in the supply chain. So supply chain is very important to us, and we are not looking to necessarily bring stuff in that we don't do today. And matter of fact, we could look at, if somebody else does it better than we do, we will hand it off, because we want, again, our goal is to make sure that transferee and or the HR person is most satisfied. So we've got to get the best supply chain out there. You talked about in the early initial part of your question, so what does it mean for the industry with consolidation or not? It's going to depend on what the corporations are doing, what the clients are doing. Now, I'm strictly talking about the relocation side of the business, right? So in that side, corporations, what did I say they wanted? They want technology, so I got to build it, and I'm building it as fast and furious as I can. We're building a lot of stuff inside, although I will tell you, as we speak, we are partnering with other people that have certain technology niches, and I don't want to say who or what or where, but that is our goal. So we will use technology, but when we're building our own system, and we have some, what I'll call normal relocation type, software and mechanics within our four walls, and then it's building out and customizing for what our customers want. So we'll do that. Your question was all encompassing. So as far as acquisition, I think that there's room for a lot of players, but I do think that there's going to be consolidation. And I think that, one of the ways, not the only way, one of the ways that corporations can get a lower cost is with consolidation, because you just get the synergies. Certainly putting BGRS, and SIRVA together created a lot of synergies. And that's good. It's good for the customers in the long run. But I do think that, if volumes remain where they are, I think that they will pick up, but I think you'll see some players exiting. Some of the players out there are private equity owned, and by definition, they're going to have to sell, because, that's the job of private equity.
Right. Yeah. So in that context, I mean, is there specific, to the extent you're able to talk about it, is there specific pockets of the industry that seem more attractive to you from an M&A perspective than others?
The easiest thing for us to do, and I like easy, all right, is relocation management companies, because what you're really doing is taking that, by the way, the people are one of the most important things in that. That's what we do. We service people, right? But you get as well as the clients, and then you can offer, when you're building technology, it services a bigger, wider group of people, more clients. On the moving side, like I said, we have continually looked for any agent who's living and breathing under another logo. We look at them, we bring them in. We have brought over a couple, in the last, 12 months. So I'm pretty happy about that. That's easy, because we bring them in. If you were to buy a whole van line, that is tough, right? You got to integrate. But when you're bringing in these agents, it's a pretty easy lift and shift. So those are the two areas that we're looking at.
Interesting. Okay. And so with all of that, I mean, you talked about your strategic priorities. Obviously, right at the start of the conversation, you talked about your clients, the benefit of this transaction to your clients, and their employees. Just maybe let's spend a couple of minutes on like, okay, what does that actually look like? Like, what are the benefits or what are the implications of this transaction and what you've done recently for the clients? What can they expect more of, less of, different of?
Yeah, again, I think I touched on it, but if not,
Yeah.
I'll just reiterate. But look, they want us, they want technology. They want us to be something where they can depend on the information, the flow of information, how, and now I'm looking at it from the HR standpoint, right? From the mobility executive. They want everything at their fingertips. That's what we build. We have SIRVA Connect HR, and that's the module that they go in and what our what we do is we take all the APIs with, all the different vendors and put it into our system so that they have one view of that. We will continue to build on that. For the transferee, again, it's simple stuff, but it's got to be seamless. It's got to be, I'm going to take a picture of my expense reports, my bills, and send it in, and just seamless for them to do this. It is, as we all know, one of the most stressful times in our lives when we're moving and changing jobs, right? So we got to make that seamless. That we will continue to do. We're on that path. We actually delivered a lot of that to the clients already, but we continue to build on that and saying, what's the next thing we do? What's the next thing we do? The back end systems, I think by mid-year 2025, we should be done with all the integration and everything. We were always on the same platform, BGRS and SIRVA, but it was the same operating platform. But of course, you modify your operating platform. So they were a little different. And there's been a lot of work to get them together, and that streamlines everything. So I think we have a lot of productivity gains when we get everything done by about June of next year.
Got it. So that contributes to the other thing you talked about earlier, which is lowering your costs or lowering the price to the customer, which is brought in through more efficiency gains, whether it's through tech or otherwise. Okay, interesting. Does this well, let me ask you this. So private equity firms by their very nature can be or at least buyout firms can be quite active, quote unquote. And I would say that with a wink, except again, this is a public viewing probably. So many people will see it, but many can be quite active. Others can be less so. What are you expecting? Have you had a conversation with your the BlackRocks, KKRs, et cetera, as to how active do they want to be in defining the strategic roadmap for the business and the execution plans? Do you expect any changes to your team as a result of this that people should be aware of? Anything else in that context?
So as far as the team goes, no. We are right now, we will. So by the time this gets published, we'll have one of our treasurers is going to become interim CFO.
Okay.
And as the new board gets in place, they'll take a look and see if that's a permanent position, which I think it will be. But your underlying question really goes to, so no management change other than that. Okay. But your underlying question goes to, how are they going to be involved are they day to day? Are they month by month? Are they every quarter?
Right. Thank you for saying it that way. I didn't want to say that.
The good news is, it's what I told you earlier. They're going to have a KKR representative, me, and 3 independent board members. Okay. And because they want to make sure they get professionals in there that aren't private equity. And good private equity companies will do the same thing. They'll put 2 or 3 of their own private equity company on, but they'll look for independents that can add a lot of value. One of the candidates I interviewed just yesterday had some early background in finance, and said, I'd love to be a mentor to, the rising CFO in our company. So I think we're going to get some really good people. I think we'll have a series of probably repetitive board meetings so I can get everybody up to speed. I will fly out and see people to get them up to speed. It's in my best interest for them to understand this industry as fast as they can. But again, I've looked through all the resumes here. These are pretty reputable and high-powered, executives that have, now we have about 5 that, we'll pick 3 out of the 5 or 3 out of 6.
All right. Okay. So that's actually, you did say that earlier, and that's actually, if I were in your shoes, I'd look at that quite favorably because your board sounds like it's not going to be stacked with a bunch of folks from the private equity owner group. It's more operators that can actually support
Yep.
you rather than, sort of breathe down your neck, if you will, quote unquote.
Yep.
I say that with all love for my
all the love
private
in the
equity
world.
brethren.
Look, and I've worked for private equity for a long time, so
Right.
I'm used to it. But I'm actually happy that they're putting some experienced board members on here that can actually advise management and advise
Right.
me.
Right. Got it. Fascinating. Okay. Is there any other changes coming out of this either which way that we haven't already touched on that you think would be relevant to discuss?
No, I think that absolutely not. I mean, there's no changes, like you said, management is intact, where everybody's moving on. It's good to be now focused on what we should be focused on, right? Or at least for me to be focused on what I should be focused on. But it does, going back to the earlier questions, give us the liquidity to acquire, to build, to fix things, to get higher productivity, to do all of the things that the clients are clamoring about.
Yeah, it gives you a whole bunch more runway.
Yep.
As we refer to it. Okay, excellent. Well, look, Tom, this is obviously a very important development and an important conversation. Like I said at the start, it is not only important for SIRVA and your clients and your supply chain and your colleagues at SIRVA, but it has an implication on the broader industry because we are such an interconnected industry. And so I appreciate you taking the time and being as transparent as you have been, which is I know it can be tricky in these kinds of situations as to what you're willing and able to say versus not, but I certainly for one appreciate you being open and transparent about it. And there's a few things that I think that I like, which is that it sounds like it's sort of a little bit of a getting back to business situation for you, which allows you to sort of focus with a longer horizon and not suggesting that you may not have been making smart business decisions previously, but it certainly the greater runway gives you a lot more room to basically execute a more thought through strategy and be more sort of medium to longer term focus than just the next day and the next day and the next day. Having been in that situation, those are stressful times. So I'm glad that you're through it. And it sounds like there may be opportunities for others to collaborate, perhaps equally or even more so than before with SIRVA, which is obviously interesting and exciting. And I for one will keep my eye on this increasing involvement of private equity firms in our industry, which is interesting. And so to hear how they're approaching this is somewhat, if I'm being honest, it's a little bit relieving as the CEO of WERC representing this industry at this time. But it also could signal good things for the industry at large. So
it's relieving.
Any closing thoughts?
Well, just that one of the things you mentioned is, look, a lot of my time has been spent on this, a lot of time for the treasurer. It was kept pretty, and I kept our executive team up to speed every minute, but truly it was a small 2 or 3 person group that was working on this since last December. So I'm glad that I can get back to some of the things. I don't know if I ever left anything on the side because you can't. I mean, again, this is a service business, talking to clients, doing things that relate to this. No, I don't think I have anything. I look forward to seeing everybody in October, right?
Oh, that's awesome. Yeah, you're going to be at GWS in DC. Yeah, that's right.
So we'll see everybody live then. So that will be a lot of fun. Then I head off. I leave there and I go right to we have our agent convention, which is the North American Allied, and we have every agent that comes in throughout the United States and we're going to meet down in Orlando. So it's a back-to-back meeting for me.
That's awesome. No, look, I'm excited to have you there. This is shaping up to be a pretty spectacular GWS. Obviously, at the time of the recording, another 8 weeks to go, and things can happen between now and then. But fingers crossed, if it continues the way it is, it should be a really good one for the whole industry. And I think it'll be valuable for SIRVA, your clients, you,
Yep.
but also others to have you be there and active. So I appreciate you taking the time and joining us. All right.
Okay.
Well, thank you again. I really appreciate the time. Obviously enjoyed my connect with you previously and the ongoing conversations we have. And this is exciting stuff. So I'm
Yep.
happy for you. You can take
Thank
a
you.
little bit of a breath before you start running on that treadmill again, but good times ahead, and thanks for taking the time.
Yeah, thank you so much.
All right.